These 2 books will help you pass your eval challenges and get consistent payouts. Books don't work, right? I've read over 50 trading books, and out of all 50, these are the 2 books I'd recommend you read above all others if you want a roadmap to becoming a CPT, consistently profitable trader. Both of these books were written by this guy.
Be in the top 3 at our firm last year. You needed to make more than $20 million in net trading profits. To be in the top 3 over the last 2 years, you needed to make over $35 million in net trading profits.
He has created multiple 7-figure traders and knows how to build consistently profitable traders. There are many gurus who flaunt the beach trading lifestyle. They flaunt Lambos, and then they give you the same old recycled knowledge that you can find on Baby Pips. This channel is designed to bring the professional knowledge to the independent trader like you and I. And you may ask, why would I need to read a book? It's because professional mentorship is hard to come by in this space and costs a lot of money. But some of the professionals write books, and you can gain mountains of knowledge from the pros. Oftentimes, their advice is contrary to what we hear on social media. Don't sleep on this video because it actually took me 4 years to make, as well as time for me to implement what I learned in these books. And it's led to me passing challenges with over 10 prop firms and hundreds of thousands in earnings, as well as I built a step-by-step process to help hundreds of students get payouts. In this video, I'm going to save you time by giving you a quick summary of 6 principles that I learned from these 2 books that can potentially transform your trading career. Trust me, every trader that I've recommended these books to, when they read them, they've always come back with a different mindset. Adopting the first principle alone will change your perspective as a trader. Now, let's jump into principle number 1. Principle number 1, when I first started learning trading, I missed a huge step. I learned candlesticks, support and resistance, patterns, double tops, heads and shoulders, entry models, etc. And I heard that trading was 80% psychology. When I took my first FTMO challenge back in 2020, the rules forced me to look for a professional trader to learn from. The closest thing that I could find at the time was Mike Bellafiore and S&B Capital. So the word prop firm was used back then by most eval firms. Some of them have went down now, but they are not traditional prop firms. The traditional prop firms actually train traders to trade their money, right? And they do about 50 to 70% of the volume in the US markets on any given day. So I figured if I could learn from them, it would help me pass the FTMO challenge and get consistent payouts. Now, they trade stocks, so I had to translate the principles into knowledge that I could use trading CFDs and futures. Now, much of what I've learned was unheard of in our space. I didn't hear anybody on IG. I didn't see any other YouTubers talking about it. So what I've done a lot of the heavy lifting so I can help shorten your learning curve. So in the beginning, I misunderstood the role of technical analysis, okay? I thought that it was only the mastery of identifying patterns that would help me win as a trader. I was wrong. I read in One Good Trade, Mike Bellafiore, he says that this job is most like being a professional athlete than anything else I can think of. And another 8-figure trader gave the analogy of poker versus the slot machine. In trading, memorizing patterns and trading the pattern alone without the proper context, without being in the proper symbol, is like showing up to the slot machine and pulling a lever. It's a true gamble. Trading successfully is more like poker. You need to understand the cards. What is the best hand? What is the situation you are in? And then you need to learn how to play that hand in the best way. And even if you play that hand in the best way, you may still not win, right? You still may lose. So another analogy is the skill that an athlete or sports team develops. You can develop layups, mid-range shots, 3-pointers. You can become great at shooting layups. But would you shoot a layup if someone like Shaq, a dominant defender, is standing in the paint? Absolutely not. It'll get blocked every time, especially for someone like me, who's under 6 feet, right? The hardest part of trading, in my opinion, in the beginning, is understanding the concept of edge. And this is where principle number 1 comes in from the playbook. You have to understand the concept of edge, or what gives you an advantage in the market. You have to understand when you have the most edge, when there's an inefficiency in the market that you can exploit. So Mike Bellafiore recommends you hyper-focus on building a playbook. that will include all your known times when the opportunities that you have to exploit will appear, how to exploit those opportunities, and what the quality of those opportunities are. And what you'll do is you'll learn to trade those opportunities over time in the best way. So the playbook is a set of archive plays that make the most sense to you, that have been back tested and forward tested so that you know the win rate and R&R of these setups. He mentions documenting the following things. Number one, the big picture. Understanding from a big picture perspective, maybe higher time frame from a technical perspective, or from a fundamental picture, what's going on with your symbol? What's the trade idea? What's the bias? Are we bullish, bearish, or neutral from a higher time frame perspective or from a big picture perspective? Number two, any intraday fundamentals. Your setup require intraday fundamentals, right? So does it require a news release, or does this particular setup work without intraday fundamentals? Number three is the actual setup itself, technical setup. What's the actual pattern that you need to see in order to position your stop loss, your TP? Number four is, he says tape reading, but this to me, for people that trade CFDs and futures, this will entail define entries, exits, stop loss management. If you need to see a certain amount of volume, if you're going to use footprint charts and see certain divergence, if you're going to read tape and see certain patterns on the tape, all of this should be documented in your playbook as one play, right? From big picture, intraday fundamentals, the technical analysis, the trade management, and then also there's a level of intuition that comes into this, okay? So these are the things that he mentions, and what will happen is you will end up developing several different setups for different circumstances. I remember when I first traded FTMO, I passed challenges, I got funded, and when I got to the payout stage, I hit different market conditions, and I went into drawdown immediately because I didn't know how to trade different conditions, and I didn't have setups for different conditions. So hyper focus on building a playbook. Principle number two, for the first year of my trading, I focused on pattern recognition alone. I did hours and hours of replay of patterns that I was taught. You may be doing this, whether you trade supply and demand, order blocks, liquidity strategies, divergence, ICT, it doesn't matter. Here's the principle that changed the game for me. Mike Bellafiore, in his book, he says, you are only as good as the stocks that you trade. There are too many developing traders who do not know what a good stock is, how to find one, and waste too many trading days mistaking that the markets are devoid of opportunity. So here you reference the stocks, but since we trade CFDs and futures, we can just say symbols. If you are trying to trade a symbol that is not moving on the particular day, you will get chopped up. Let me ask you, have you ever entered a trade based on a set pattern and it ranged after, or had choppy price action after you saw the pattern, right? This happens. The problem with many of us are that we are educated on price action and patterns alone. We are not trading during the times when our symbols move the most. So Mike Bellafiore emphasizes in his book that traders should trade when there are catalysts that move their symbol. These can be fundamental catalysts or technical catalysts. And we should also use indicators outside of price action that will give us a hint that our symbol is going to move more than regular, right? Or that it's going to trend for the day. For example, I did a study on US equity indices, and I found that over 60 to 80% of the trending days happen when the relative volume was more than around 1.3, 1.5. So me understanding that, I can use relative volume as an indicator to help me understand when it is likely that I'll have a trending day. You can also use market internals with indices. So there's several different things that you can use outside of price action that will give you an indication that your symbol is going to move so that you don't get chopped up. So if you're a beginner and you're just learning, it'll serve you to do some research or find a mentor that can educate you on how to identify when the symbols that you trade move the most. And it's not only just about market session. I see some people say only trade during NY or only trade during the Asian or London. which is fair, but that's only part of it. There's times when the indices just don't move very well during the NY session. So it's not only about the session. You need to know the catalysts that move the market the most. When you have big, large percentage changes, large movements, it's easier to make money. Now, principle number 3. When I first started trading, I was misled by people claiming they had secret strategies. And I too thought that I had to come up with some secret custom strategy. I also thought that I could memorize a bunch of patterns and create strategies on my own. Mike's advice is to be unoriginal. There are many people claiming to be market gurus and have some special sauce. But what I found is that there are classic, proven principles that work and continue to work in the right market conditions. And these are the best for beginners to develop. So find a mentor who has already been where you want to go that can teach you the trading skills that you need to adapt to different markets. I didn't hear about adapting to different markets enough, and I didn't have the skills to adapt to different markets. So when people say all you need is this one model, that one model will not work in all market conditions. So I see many times people, they focus on this one model and they try to force it on the market. But to be successful, you need to develop adaptable trading skills because the market is not the same every month. You need to develop a full set of skills, a different plays that oftentimes are simple, but you have to understand when to apply those setups. So principle number 3 is all about being unoriginal. Find someone that has already been successful, the principles, and learn from them the skills that you need in order to change, in order to trade in different market conditions. Adopt their playbook, adopt their setups that are already proven in order for you to cut the learning curve. Principle number 4. So psychology is such a big topic in the trading space. And Mark Douglas taught us the importance of trading the entire series, a given set of series. He taught us how to trade through losses. Now, Mike adds to that concept by telling us to focus on one good trade. So in the book, One Good Trade, he says a loser may have been one good trade. If your fundamentals for a trade are sound, then that is one good trade. Consistently profitable traders obsess about making one good trade and not money. Your job is to make one good trade and then one good trade and then one good trade, right? So he gives the example of Shane Battier, a player who had to defend Kobe Bryant, one of the greatest players to ever live. Shane Battier in an interview says, my job is not to keep Kobe from scoring, but it's to make him as inefficient as possible. So Kobe was so good that 2 or 3 defenders couldn't stop him from scoring, right? So they learned that they could have an edge on him by forcing him to shoot on certain spots on the floor where he would miss more shots, right? So during a game, Shane Battier forced Kobe to shoot from a shot that him and his coaches agreed that Kobe couldn't shoot from, or he made less shots from. He forced him to that spot, and then Kobe buried the 3. He buried that shot, and his team won the game. Now, the process had gone just as he hoped, but the outcome he could never control, right? So we cannot control the outcome of our trades in the market. Once we have a playbook that is proven, we must judge ourselves based on process and not money. That's the principle, right? One good trade, process, and not the money. So we took a good trade if we followed our process, not if we made money, right? We took a bad trade if we didn't follow our process, even if we made money, right? So the better you can become at shifting your mind to focus on process and edge, the less psychological issues you will have. If you can take trades that are only in your playbook that have been back tested and forward tested, you understand the stats from those, you will have less problems with revenge trading, with FOMO, with inventing trades. All of these hurt our P&L. So focusing on trading from your playbook only, one good trade. If you get stopped out, you have to erase that and re-enter another one good trade if you see it, right? This will help out in a big way. Principle 5, trading is not all about having a playbook, psychology, and risk management. One thing that is under-discussed in our space on IG, on YouTube, is performance. We are mental athletes, trading better, executing trades better is something that we have to focus on. So Mike Bellafiore is the first person I heard recommend to record your trades and rewatch your recordings like a professional athlete. We have to find the areas where we can improve our entries, our exits, and our trade management, right? So principle number 5 is all about performance review and measurement. For the first year and a half, I was journaling because I was told to journal, but I had no idea how to use the data. In the book, he says that we should record our screens. This acts as a form of journal, right? We should store our trades daily, archive them, and we should review them looking to improve every little aspect of our trade, right? Because as you size up, your entry, if it's off maybe 10, 15, 20 seconds, that's $2,000, $3,000, $4,000, maybe even $10,000 worth of a difference, right? If you exit too late, if you try to hold for too long, you can leave money on the table. So this performance as a trader, actually executing your trades well, that's a skill itself, and that's under discussed in our field. So also another thing is that we should have stats. We should have a way of interpreting our stats. We are a trading business, right? If we cannot build the habit of reviewing our trades, reviewing our data, and if we are not focused on becoming better at execution, then our trading will be stagnant, right? We may have really good edge, but we may not have the highest P&L that we can have. Principle number 6, and this is the last principle. And this is one that has saved me from blowing up challenges and funding accounts and has led me to maximize on certain opportunities in ways that I would have never imagined. So Mike Bellafiore, he says, and I quote, "To improve as a trader, you must determine which setups make the most sense to you. And then you must make more with more size." So adding more size to my best setups is what helped me achieve in one trade what previously was my monthly goal, right? So I previously would say, hey, I wish I could just gain $500 from trading, right? Then that became $5,000 from trading, right? In 1 month. And I hit a point where I gained $5,000 in one trade, $9,000 in one trade, right? Me achieving my monthly goal in one trade. So this I can attribute to Mike Bellafiore. So proper risk management or sizing is important, right? So another aspect of this is we often hear 1% per trade, but we don't hear that trades with more edge should receive more risk and that we should be constantly searching our data for these trades. We also don't hear about the supporting mechanisms for protecting your account through proper sizing, right? So Mike suggests that everyone develop a max daily loss and a consistent size that you're comfortable with in the beginning. So then you focus on consistency. And as you develop consistency, you're consistently profitable with that size. You search for your best trades and you raise the floor or your max loss and you bump your risk, right? You bump your risk up on those trades. So as you have data, you can start to score your setups. And as you are able to differentiate the best from the worst, you'll stop trading the worst performing setups and you start to invest more into the best setups, right? So having that max loss will always protect you, even when you become a large trader. But in the beginning, it'll help you live to trade another day and stop burning up accounts. So focus on consistency, a size that you're comfortable with. And as you have trading data and you're able to differentiate between your best and your worst setups, you'll be able to score those setups and then start to bump the risk up on your higher quality trades. So then you'll end up with B, B+, A+ trades, maybe even A++ as you build out your playbook. Please like and subscribe. If you want to start building out your playbook or need an idea for another setup, watch this video for one of the easiest setups for traders to adopt.